So we are looking at support and resistance tonight. We have touched on it, a couple of times, but we'll be looking at it, from a different angle, tonight. And, as much as possible, we'll try to be interactive here and there. Now, when we look at support and resistance, there are concepts in trading that are very important for the trader. Sometimes that could mean the difference between succeeding as a trader and actually failing as one. What basically I want us to have a look at tonight is how to identify support and resistance at the lower level, and of course we begin to progress into the deeper level, as it were. Now, when we talk of support and resistance, starting with support, because realistically, it is the case that an area of support is also an area of resistance. It just depends on where the price is. So assuming, for instance, you say that was assuming, for instance, you say this was let's do this. So assuming you say this was an area of resistance, if you say this was an area of resistance, all right, since we are talking, let's drag it this way then. I am going to be explaining what that means shortly. So when you say this is an area of resistance, otherwise known as support and resistance zone, somebody asked a question tonight in the general channel, the general community channel, and obviously he went on to send me a private message. And in my response, I used S and R, S/R, otherwise sometimes referred to as SNR. S/R is basically support and resistance. So I used this, and he came back to me saying, what is this? So obviously I had to explain to him. So these are terminologies. I mean, you hold nothing against him. It just depends on how he has learned or who has taught him. But there are little terminologies and abbreviations we need to begin to get used to as traders. I mean, sometimes, we will say things like GJ. I mean, I'm sure by now all members know exactly what that means. Pound, Japanese yen. So those are things, if you don't know, feel free to ask. We all have to start somewhere. So talking about this now, talking about this zone we've just drawn, we could say this is support and resistance zone. It just depends on where the price is. If the price is above the zone, then this area is acting as support. If price is here, then it is acting as resistance. So, if somebody just uses the word support, you basically know what they mean. It is support because they are kind of like at the top. The price is above, and they are seeing it from that perspective. Whereas if someone else says resistance, they are looking at it from this perspective. But whether the person says support or resistance, an area that was once support could then also become resistance later. So in a nutshell, explaining what support and resistance is, in my own note here, I've basically, said that, support basically is the price at which an asset can trade down, but not exceed for a period of time. I'm trying to be very simple here, but you know, sometimes we do get very technical. But yeah, the support is the price level where an asset can trade down to, but not exceed for a period of time. Support is that level at which the aggression of buyers overcomes the aggression of sellers. Now, looking at the higher time frame, it's where demand exceeds supply. Now, that might be a whole lot I'm saying there. Obviously, just pick the one you are able to grasp now and run with that. But obviously, I would go through it again slowly. It is the price where the asset, and a lot, and we keep on talking of using the word asset because it's the generic term, that encompasses currencies, commodities like gold and oil and silver, cryptos, and what else? Indices and so forth, and stocks, obviously. So when we use the word asset, it encompasses all that. You could either say asset, instruments, or what's the other terminology? I'll remember later. But anyway, that is basically what it means. We talk of supply in this case. We're thinking of the price being at the top. I'm sure we all know that these red and green candles, like we call them candles or candlesticks, represent price. Now, because we are on the 1 hour time frame, it basically means that each and every candle took 1 hour to develop. We would say and repeat this over and over again, obviously, because there are always new members in our midst or guests. So we see here, each candle, whether red or green, took time to develop, and we are on the 1 hour time frame. If we're on the 4 hour, it means each candle took 4 hours to develop and paint. If we are on the daily time frame, as here, D1, it means each candle took 1 hour. Sorry, a whole day to develop. As a matter of fact, let's just go there quickly. So we are on the 1 hour time frame now. If we go to the daily time frame, well, you can see it is now a small zone there. Straight away you can see as well that what seemed like a strong area of support and resistance on the 1 hour might not be a strong area of support on the daily time frame. So that is obviously one of the reasons why we do top-down analysis, basically starting from the higher time frame and working our way down to the lower time frame. Now, let's go back to the 1 hour. We'll go back to the 1 hour here, and we can see that when price is over here, this is an area of support. How do we know it's an area of support? Well, it's an area where there was a lot of challenge. Well, if you like, the sellers were pushing the price down until they got to this area. They struggled to push it lower. The sellers were, obviously active until they got to this area. The buyers pushed them up until here. Right from here, you could say the sellers were having a field day. They were having their way, pushing the price down, pushing the price of the currency down. This, by the way, is EuroCAD. It could be any currency or any asset. The sellers were pushing the price down until it got here, and the buyer said, you are not having your way anymore. The buyer stepped in and pushed the price up. They pushed the price down again, the sellers, and the buyers pushed it up. And of course, by the third time, they pushed it past that area. Now, we did say, some time ago as well, then that when the price is coming down like this, it could be a number of reasons why it's coming down. It could be that the sellers are actively selling. They are actively selling, or they are taking profit. So basically, they pushed the price. Some of them got in here and bought and pushed the price all the way there. And then when it got here, they began to sell. So here, you had buyers were in command, they were in control. There were a lot of buyers going on, a lot of buying going on, a lot of buying going on. At this point, some of those buyers became sellers. Some of them became sellers because they were taking profit. They were taking profit or coming out of their buy trade, and hence the price was coming down. Yes, buyers turning into sellers, but then there were also brand new sellers who came into the market because they saw that there was congestion here, or what's it called? Consolidation here, and they thought to themselves, this is a good time to sell, you know, like we always do. Maybe they boxed up that area, and when the price broke out of the area, they began to sell. So new sellers came in here, or somewhere down, coming down here. New sellers came in, and also some of the buyers were taking profit, as in closing their trades. That's why the price was pushing down. So they now got to this area, support and resistance, and there was a bit of a tussle, a tug of war as to who is going to be in control of the market. But eventually the sellers, you know, won, and they continued to push the price down. You know, even they got here, the buyer stepped in again and pushed it back up, but the seller said, we have more energy, and they pushed it all the way down. So we see here, this is an area of support and resistance. While the price was at above it, it was support, but when the price got below it, it was resistance. My goodness, you know, this is a powerful, powerful strategy. I mean, Toby got about 80-something pips from Euro, New Zealand dollar on Friday. And obviously, I wanted to know what strategy he was using. And he did say, you know, he combined a number of strategies from GWT. One of them was the fact that there was congestion. Well, not this pair, but on Euro, New Zealand dollar, there was congestion. He called it congestion. I mean, that's another word for it. I mean, obviously, you know, it's called consolidation, congestion, and whatnot. You know, he says that because there was congestion and there was the breakout using the fractal system. And obviously, I think there was another reason why, you know, there were 3 reasons why he entered the trade. That is confluence trading, guys, having more than one reason to enter the trade. But guess what? This is perhaps the most important of the reasons for entering a trade: support and resistance. That is why it is all important, guys, that you know how to identify support and resistance. You know, because with most strategies, oh my goodness, if you know, even if you don't get anything during this session, get what I'm about to say now. I've said it before, but repetition is good for learning. Listen to this. With most strategies, let me qualify that. With most successful or profitable strategies, it has to revolve around support and resistance. So whether you are trading engulfing candles, whether you are trading fractal breaks, whether you are trading, I don't know, triangles or any other strategy, it works best. It works best. It works best at support and resistance. Let's just pause and let that sink in. My goodness. So we see here, so even as I've said, support is the point at which price, support is that price level where an asset can trade down but not exceed a certain level for a certain period of time. That's exactly what we see here. The price was trading down. It did not break below this level for some time because there was a tug of war with the buyers or an opposite force. So this being the 1 hour time frame, let's just measure it. Let's bring out the period separators. So we see the price was coming down. These are the period separators. On the 1 hour time frame, we see it took 2 days before it broke down. Well, this is the 1 hour time frame. If you were to go to the daily time frame, you will see that support could actually be over a number of days. The support and resistance area could be over a number of days. So this is basically what we're talking about here. That is the period of time it took to break through. And guess what happened? Even when it broke through, price came back to retest that area. Price came back to retest that area. It's almost as though the buyers were trying to say, let's see how determined you are, sellers. Yes, that is basically what the buyers were saying. They were saying, sellers, let's see if you are really determined. Let's see how determined you are to take this price down. Let's see, let's have a little battle. They pushed the price up. And of course, the sellers did let them know that we are serious. This price is going down, and they pushed it even lower. So that basically is what support is. The reverse is true. The reverse is true for resistance. Resistance, as it were, is that price level, just switching words around. Resistance is that price level where an asset can trade up but not exceed for a certain period of time. Resistance is that level where the aggression of sellers overcomes the aggression of buyers. On the higher time frame, it is where supply exceeds demand. Now let's look at that again closely. Let's look at that again closely. Let's look at that closely. I mean, I have explained it from one perspective. Let's see if we can explain it in a different way as well. Wow, wow, wow. So we need to really grasp this and, as it were, begin to master it. We need to begin to grasp this and master it some more. Okay, so we are saying it is the price that support now, the price where the asset can trade down, coming down, but not exceed this area. It's a zone. It's usually a zone. It's usually best if you mark it out as a zone as opposed to a straight line, just one line like so. Some people could mark it out like that. Well, yes, it's understandable, but if you want to trade it more, if you want to trade it or trade the market with precision, it's better to have it as a zone. You know, then you can see, even as here, then you can see where, you know, the area, you know, well, you can then make allowance for price movement. You can see here, this candle actually pushed all the way in, but, you know, dropped back, forming what might be almost like almost a pin bar. Well, this is more like a pin bar instead. You know, people, I did say we will be trading pin bars and learning some of those things as we move along. So we see here, it is the price level, you know, that, you know, the sellers could not push below for a certain period. I went on to say it is the level at which the aggression of buyers overcomes the aggression of sellers. The aggression of buyers overcomes the aggression of sellers. So the sellers were pushing it down. The aggression of buyers took over here. At least they took over here, pushed it all the way up. The buyers stepped in, so their aggression, they became more aggressive. All this time, they were more or less like sleeping. it's like the buyers were sleeping. When it got here, they woke up and pushed it up. The sellers pushed it back down. The buyers stepped in again until the sellers eventually pushed it down. So that is basically what support is, and the reverse is true even to give us resistance. So in a nutshell, this is what it is. How else can I say it? I mean, you will find support and resistance all over your chart. I mean, sometimes it could be a minor area of support and resistance. Other times it could be major. Sometimes it could be minor. Other times it could be major. We're going to focus on the major areas today. The major areas kind of like stand out. Well, not kind of. The major areas of support and resistance stand out. They stand out as what we will call market structure. My goodness. My goodness. My goodness. My goodness. This should take our understanding of the market to a different level. Let me just find something for you. We know the market never moves in a straight line. We say that all the time. It always tends to do a zigzag. I'm trying to find a proper zigzag for us. Well, you could say that's a zigzag. It does a zig, a zag, zigzag, zigzag, zigzag. It's not just going up in one straight line. Okay, here it's kind of like ranging anyway, but I'm trying to see if I can find a very obvious zigzag. Okay, well, I suppose this is good enough. So between here, anyone can tell you the price rose from here all the way there. But even in rising all the way there, it did not just do a straight line. It didn't just go in a straight line. Instead, it went as a zigzag. A zig, zag, zig, zag, zig, 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 whatever, whatever, whatever. Zag, consolidation there, and then up again. So that is basically how price moves. That's how price moves in the market. That's why it's good to know areas of support and resistance, if you like, areas of strong support and resistance. Now, talking of market structure, like I said, market structure are usually areas of support and resistance. Where the price swings up to, or if you like, the completion of the zig and the zag are usually market structure, especially when they stand out on their own. You can identify this as a high, obviously. Let's go back a bit. You can identify this as a low, a high, a low, a high, a low, a high. So the lows or the highs and the lows is what constitutes structure. The highs and the lows, or the lows and the highs, is what constitute structure. So there needs to be an understanding of market structure, support and resistance to begin to trade successfully. Now, some of you are here as guests. You're going to start taking our trades. I am going to be going over soon to how to trade some of our signals, i.e. the Supremo signals. And I'm going to be showing you that soon. That's why it's all important you know how to identify support and resistance. Because some of you have said, oh, well, we see that the Supremo suggests, gives a suggested entry price, but does not give the end, it does not give the support, the stop loss and a take profit. Well, we tend to use market structure or support and resistance for letting us know where to place our support and resistance. That is all important. That is basically one of the reasons why I had to look at this today. And I know even some of our traders who've been with us for some time definitely would have gained from this. And of course, in the coming lessons where we'll be looking deeper into major areas of support and resistance, and of course, minor areas of support and resistance. So let's basically consider this one more time. The swing lows and the swing highs usually form structure. Wow. So if you like, let's do this. This is structure. That is structure. That is structure, 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 structure. You know what I mean. See structure everywhere. Structure everywhere. I mean, in this case, you find out there was a swing low here. Well, yes, there was a swing high, swing low. There was a swing high here, and then a swing low, forming this low, structure low, a swing high there. Well, what do you make of this? Well, let's take this one as another swing low. You can see this swing low and this swing low are kind of like close. So generally, if you are going to be taking the trade, you could either choose to go with this swing low as your support. Obviously, if this is where you enter the trade to buy, you could use this, or maybe here, you could use either this as your support, or use this one as support, because they are kind of like close. So obviously, the more you practice, the more the further you go in your Forex journey, the easier it will be for you to understand. So what we're going to do now is delve right into, let's see, 1 minute, let's see. So basically, if you like, support and resistance are opposite sides of a coin, just like heads or tail. I mean, this is the zone, for instance, support and resistance zone. Like I said, when the price is above this area, above this blue zone, I've marked it as blue. When the price is above it, it is support. So this area is acting as support. But once the price breaks below, it then becomes resistance. It is the same area, the same zone, but it's acting as support when the price is above and as resistance when the price is below. Now, the thing is, you cannot identify an area of support and resistance except you look back in your chart, except you go back using previous data. There is no other way, as it were, to necessarily identify an area of support and resistance. So even where we are now this is the 1 hour candle time frame. This was the last candle that formed on Friday. Today is Sunday. The market is opening in about 2 hours or so. But this was the last candle that formed. With this candle, obviously, if you look back to this area, all these candles and the price data and information in the past, then you can begin to identify areas of support and resistance. Otherwise, you can't do it. So if the market has been going on for many years. I mean, at least the MT4 has been going on for many years. That's why it is the case that you can actually scroll back in history. You can scroll back in time, even if we go to the monthly time frame. This is this month, which ends tomorrow. I believe tomorrow is the 31st. So this is this month's candle. This candle is going to keep on forming when we wake up, by 10 o'clock. And by the 31st, it will stop. A new candle will open. Now, even looking from where we are, we can see the history of previous months, because this is monthly time frame. It means every candle took 1 month to develop. Now, the furthest we can go here, obviously, is that bit. If we look down, that was September, the price for September, or if you like, January 1999. How many years ago is that? That is obviously a lot of years. So we see we have the data, the price data and movement for so many years, you know, even as we scroll back. There are some people who trade doing the analysis using the monthly time frame. Obviously, those are the big boys. I mean, not for those of us who have hundreds of pounds or thousands of pounds trading fund. You know, we're talking of those that have, you know, millions and billions. They are the ones that, you know, usually would use the daily time frame. You know, they are the ones who can afford to allow for huge drawdowns. I mean, we we go into a drawdown of about 50 pips and we begin to panic. You know, but those guys, you know, they could enter a trade, a buy here. Well, not that they necessarily would, but they could enter a buy here. Instead of the price going up, it goes up a bit and begins to reverse down. So let's say they enter the price here for a buy, and then it goes down against them, you know, by how many pips? 1,300 something pips. They have the box, they have the money, they can, you know, absorb that shock. Just basically wait for the price to go up again, back to where they entered, and even goes even lower to almost 1,800 pips. Now, how many of us can can stand that? Until the price eventually went in their favor, and obviously by now they would have sold because they are in profit. The price has gone higher than where they entered. That is basically the monthly time frame. But going back to the 1 hour time frame, I'm sure we now understand, you know, I'm sure you now get it, Blessing, you know, support.
Yes, I understand now.
Support and resistance. But like I say, you know, hopefully by next week, I will have the slides open. I will have the slides where you can actually see it spelled out, you know, but you know what to do. You can always do some homework and research as well. And follow us closely, it will become even clearer. Okay, any more questions? Any more questions? Any more questions?
Yes, hello.
Hi, good evening, Sebastian.
Good evening. I am wondering about the structure of the market. How does it come in? Is it when the resistance and the support are broken through, so that the end at which, you know, the market drop comes below the support, and where it goes above the resistance? Are those the ones you say is the market structure?
Okay, I mean, the market structure, you know, kind of like stand out. You know, it's a, well, you could put it this way, it's a point at which the market reverses. So the price was coming down here, for instance. When it begins to reverse, it forms a low. So that's like, you know, a high coming all the way down, forming a low, thereby forming structure. You know, so structure does not form, if you like. Structure does not form until there's a reversal. Mm-hmm. Sometimes it could just be a pullback, and even as we've said earlier on today, it is the case that what you see as support and resistance on a lower time frame is not necessarily what you would see as support and resistance on a higher time frame. In a sense, what is support and resistance on a lower time frame is not the same as we have it on the higher time frame. I'll just explain some more quickly. Here, for instance, you know, we have a swing low, or if you like, structure low. structure high, structure low, structure high, structure low, and so forth. Now, I mean, I'm sure it's kind of like obvious, or at least it will become more obvious to some of us now, that this structure low and this structure, well, this structure low, let me just mark it out. This structure low and this structure low, structure low, structure low, structure low, and so forth, are not quite the same, in the sense that this one is very obvious. It's almost like stands out. It's almost like sticks out like a sore thumb, as it were. Whereas this structure low is kind of like in this area where there is, oscillation or consolidation. A structure low here is in the midst of, in the midst of a lot of candles. Whereas this structure low stands out on its own. This structure low is almost the same area as this structure low. So when the price, for instance, is dropping, when the price is dropping, say, you entered a sell here and the price is dropping, it can easily take out what is a minor structure low. The struggle would be more where there is a major structure low. I mean, this one, for instance, is a major structure low. I mean, I know the price came down here, went up, came down to the same area. So you could say, oh, this is a low and this is a low, but because they are in the same kind of area, that's why it forms resistance. And you could say this whole area is a structure low. Not necessarily just this area, at least when this one formed and the price went up, it formed a structure low. So you say this is a structure low, but when price came back down there, at the same point, it's not just this as a structure low now, in a sense, it's now the two of them, it's now that area, not just this bit, but that area being the structure low, went up, formed the structure high. Now we would now get even more practical. I'm sure you would begin to understand it even more when we get more practical. So let's just get into it, as it were. Right, you. So, I mean, we see that the significance of, drawing, structure, even as we have of drawing the market, marking out our charts with, looking at structural high and structural low, support and resistance, is basically, to help us analyze the trades, analyze the data better, so that we'll have a more precise entry and exit, for that matter. So support and resistance are not just good for identifying entries, but also how or when to exit the market. We are going to be looking at, more of that in subsequent trainings. And obviously, if you're watching this as a replay on video, you would have to, check our other recordings or sessions on supply and demand. Obviously, one thing as a recap we've said tonight is that support and resistance zones on a lower time frame, might be significant on that time frame, but when you move to a higher time frame, it then would not appear that quite significantly, or as significant as it did on the lower time frame. It is also obviously the case then that, we as traders, do a top-down analysis, starting on the higher time frame and working our way down. So the higher time frame, as it were, gives us the direction, the overall direction of the market. That is where the price is going, whether it's going down or up. We start by analyzing that on the higher time frame, like the daily time frame and the 4-hourly. But then as we begin to come to the lower time frame, that is where we find our entry. But again, like I say, check subsequent training videos and you would see how we do it. So that's it for this session, and see you in the next session of our training.